Well, first of all, here are the statistics that you need to know. Well, let's take a look at the big North Asian board. As you can see, all the markets hit hard today. Two things weighing on sentiment. First of all, worries about the consistent spread of SARS and also North Korea's claim that it has nuclear weapons. That's according to US administration officials. Let's take a look at Southeast Asian markets. Those markets are also pretty much in the red, although the losses were a lot more modest than the northern counterparts. And we can see actually that the KLSE in Malaysia did manage to nudge its head to the upside by 0.1%. Well, Europe is up and running. And as we can see there, the FTSE is moving higher, as is the SMI in Switzerland, the CAC 40 and the Xextra DAX, both moving to the downside, although the CAC 40, I should say, is very flat with a downside bias. And taking a look at the US futures to give us an idea of how Wall Street may open later today. As we can see up there on the board, the S&P 500, the Dow Jones and the NASDAQ. Ooh, it looks as if it might be a bit of a flat to lower opening, I would say. Well, today is a big day for US data, and looking ahead, we've got US first quarter GDP numbers where we will probably see a rise of 2.3%. Analysts are saying these figures won't show the damage done to the public mood by the war in Iraq, bad weather and relentless job losses. We'll also see existing home sales numbers for the month of March. US home mortgage interest rates are at historic lows on boosted home loan refinancing levels, but we have also had some recent data pointing to a possible cooling of the housing market, which up till now you might know has been a pillar of the US economy. New home sales data also on the agenda tonight, expecting a rise from February. Low interest rates and warmer weather stimulating the housing sector. And consumer sentiment, one that everybody watches. Those numbers also out tonight. That should show an improvement as the fall of Saddam Hussein in Iraq relieving fear of a potentially drawn-out, economically debilitating war. We'll get more on what's happening in the US with Jim Murphy of Dow Jones Newswire in New York later on in the show. And a quick look at the major crosses on the forex scene. Dollar yen moving higher at 120.59, up against the 121 level. Almost euro dollar slightly moving lower, euro yen moving higher at 132.72. We'll be checking in with our forex guru Nick Hastings with Dow Jones Newswire in London later on in the program as well. Well, the fight against SARS continues. Just minutes ago, China reported 5 new deaths from SARS, bringing the total number of deaths in China to 115. It also reported 115 cases, totaling 2,601 infected. The Philippines reported its first 2 deaths from the severe acute respiratory syndrome. And in Taiwan, authorities have sealed the Taipei Municipal Hoping Hospital after more than 25 suspected SARS cases were discovered there. Over 1,000 doctors, nurses and patients in quarantine to halt the spread of the deadly flu. Well, SARS has a mortality rate of about 6% now. It has killed over 270 people and infected about 4,715 in 25 nations worldwide. The World Health Organization today warned that SARS could become a horrifying epidemic if it spreads in China's provinces or in nations like India and Bangladesh. People in these countries live cheek by jowl and medical facilities are poor. Well, the SARS outbreak has been threatening economies across the region, and now fears are rising about Asia's credit rating. Citigroup says it all depends on how quickly SARS is contained. If it's done in a timely manner, Asia's safe. That's because the most affected areas, Hong Kong, China and Singapore, are countries with strong credit profiles. But if SARS drags on much longer and more severely, then Hong Kong should be wary. Well, for more, let's talk to Joanna Chua, Vice President of Sovereign Credit Research at Citigroup, joining us live from our Hong Kong studios. Joanna, a pleasure to have you on the show. Why are you saying that Hong Kong in particular is at risk?
Well, I think right now the reason why Hong Kong is particularly at risk is that the number of cases in Hong Kong in itself has been relatively large relative to the other countries in the region. And if you look at the fiscal position of Hong Kong, there's been a lot of structural deficiencies on the fiscal performance. And we think that the SARS incidence and slower growth that would be induced by SARS will mean much larger fiscal deficits. Having said that, if I look at Hong Kong's financial profile, it's very, very strong. They have virtually no government debt. But however, it's because of the fact that they have a Hong Kong dollar peg, and it's very important to ensure confidence in the Hong Kong dollar peg. One way for doing that is to prevent a rapid erosion of fiscal reserves. If they continue to run very large fiscal deficits as a result of SARS, that would undermine confidence, and therefore the currency, the foreign currency, the local currency rating in particular, is probably going to be the most relatively vulnerable among the region.
But because of these fiscal pressures that you're talking about in Hong Kong, even if SARS is relatively well contained and in a timely manner, as we mentioned, could we basically rule out any ratings upgrades for the territory?
I think certainly for this year, or at least until we get some sort of containment of SARS, we may have to rule out any upgrade. You understand that Moody's has had a positive outlook on Hong Kong's rating for a long time now, since February of 2001. And I think any upgrade right now would be called off until we get this situation under control.
Joanna, what would your take on Singapore be? I mean, obviously this has also been hit by SARS, but it has also shown, the government has shown some strong measures to try and contain it.
Well, I think if you look at Singapore's ratings, it's a AAA rated country. The government has very, very strong financial profile, that it has a lot of flexibility to run budget deficits or stimulative policies to counteract the impact of SARS. In fact, for the longest time, they've been running very substantial budget surpluses, and only in 2001, recently, they had a very small deficit. So, if situation did become worse, they have the ability, the policy flexibility to combat the situation. Hong Kong also has the flexibility, but because of the peg, it makes it a little bit more complicated than the situation in Singapore. So I see that the ratings of Singapore is probably going to be very much intact. They have very little external debt, and the government, particularly the government. So there's really no significant risk on the ratings that we see.
Where does China fit into this, Joanna?
Well, if you noticed, S&P actually put China on a positive outlook not long ago, citing, of course, the progress in financial sector reforms, among other things. I think China, at this point, we have to watch and see, but I think the upgrade prospects for China is probably also, just like Hong Kong, going to be delayed. They had a positive outlook from Moody's in November last year, and we don't expect that they would be keen on upgrading until the situation is under control. But I think because China's economy is, if you look at the size of tourism relative to the size of the economy, it's relatively small. Even the exposure to the services sector relative to how Hong Kong is exposed is relatively smaller. So the economic impact, although there will be an economic impact, perhaps will not be as substantial. So I think at this moment we think that there's going to be no major impact on the foreign currency rating, which is the rating that both agencies have on China, especially since they have very little external debt relative to the significant amount of foreign currency reserves, which is now over $300 billion. So we don't see any immediate impact or threat on China's ratings.
Okay, well, let's certainly hope that SARS is contained relatively quickly. Otherwise, this picture could change. Joanna, thank you very much for joining us today. Joanna Chua, Vice President with Sovereign Credit Research at Citigroup. Well, let's get straight out to Lisa Roque in the Singapore Stock Exchange for a look at some of the major stock movers in Asia today. Lisa, it was a pretty miserable day, wasn't it?
It sure was, Mandy. And